Hello, this is Todd Butterfield, WyckoffSMI.com. We are presenting this video series to learn or review the teachings of the late Mr. Robert Evans. Mr. Evans was the president of Wyckoff SMI from 1951 to 1967. He created lectures going over such subjects as his Optimism-Pessimism Index, the Count Guide, Springs, Jump Across the Creek, and the Ice Story, to name a few. We want to reintroduce these recordings with up-to-date charts from the recent past. This video lesson number 1 is going to review upthrusts. Every student needs to get acquainted and comfortable with the idea of short selling. There are 2 rules for short selling. 1, you sell short on the rally after an indication of weakness. And number 2, we also sell short on an upthrust. There are 2 types of upthrusts: the basic everyday variety, and the upthrust after distribution. They are 2 distinct and separate market tools, and you must use them as such. A basic upthrust tells us some information. An upthrust after distribution tells us so much more. Now let's go over the definition of upthrust after distribution. After you've seen a buying climax, and for the stock to then move laterally in a narrow formation for a period of 4 to 12 weeks or more, and then move into new high ground on an increase in volume and a narrowing of the spread, to then go back to the average level of closes, would be evidence that the entire level is distribution and not accumulation. Now let's jump into some chart examples showing upthrusts after distribution. Chart number 1 is that of Praxair, symbol PX. You can see at point 1, the stock gaps up, meets heavy selling, and closes near the low of the day. The stock had recently rallied from $95 to $125 per share, and supply came in to stop the advance. This is the buying climax. The volume marked with the blue arrow was the heaviest level in over 5 years. It then proceeds to move laterally for weeks until it moves into new high ground on increased volume at point 2. This is the logical and low risk entry for a short sell. At that point, supply comes in to turn the stock lower, and it returns to the average level of closes at point 3. The count in place will give it plenty of fuel to continue lower. All this action in Praxair has been while the general market has continued to work higher, so it is much weaker on a relative basis. Chart number 2 is that of Qualcomm. Point 1 clearly shows the buying climax, with a major increase in volume. After 4 to 5 weeks of sideways trading, the stock rallies to point 2 on an increase in volume and quickly met with supply. It then trades down to the average level of closes for a classic upthrust. It also experiences another upthrust to point 3. It trades above the previous resistance on only a slight increase in volume, and then quickly back to the average level of closes. From there, supply comes in to drive the stock down below support. The stock has considerable downside objectives from the weeks of lateral trading and the building of a count. Short positions could have easily been taken on the point 2 upthrust, as well as a move between 3 and 4, as it reacted back into the average level of closes. Chart number 3 is that of FreeportMcmoran. Once again, a buying climax leading up to point 1, then a quick automatic reaction over the next 3 days. Then the stock proceeded sideways to build a count for the next move. At point 2, we had a surge in volume as price rallied to a new high above point 1. This rally was met with selling, and a short position could have been taken on the upthrust. From there you can see the stock trails off from the highs until selling drives it down quickly to point 3. This is where it traded back to the average level of closes. Now chart number 4 is an exhibit that Mr. Evans used on his original Evans Echoes number 142. This chart shows a rally to point 14, which is on a large increase in volume with a buying climax to stop the advance. Then you had the 4 to 5 weeks of lateral movement, then the rally to 15, which was accompanied with a large increase in volume. You can see at point 15 the stock did not go into new high ground, but it did upthrust the previous resistance as shown by the squiggly line. This area stopped the 3 previous rally attempts, and then to 15 the stock upthrusted this area. Then at point 16 we had returned to the average level of closes and was prepared to work out the down count. Chart number 5 is a weekly chart of vacame technology. This chart is not quite as clean as the previous ones, but we wanted to highlight it anyway. We had stronger volume come in at point 1, then lateral trading for approximately 5 months. At point 2, we had a rally above previous minor resistance, and then strong volume comes in on the downside. The blue arrow shows a point where it appears the upthrust had occurred and the previous lows were violated. This would be a point that you could enter your short position. The stock got marked down quickly after this. Chart number 6 is a weekly chart of General Electric. Once again, the buying climax at point 1, which saw the biggest volume in years for General Electric. Volume had not been this high since the crash low in 2009. So the volume made this appear to be a buying climax at point 1. Then we had approximately 8 months of trading with a rally to new highs at point 2. Volume was only slightly higher than the previous weeks, but nothing dramatic. Not an easy point to sell short, so you might have waited for more trading to occur. At point 3, we returned to the average level of closes, and this more clearly makes the rally to point 2 look like an upthrust. It would now be much easier to try and enter a short position on any rally off of point 3. These have been just a few examples of upthrusts after distribution. Please study your charts, look for real-time setups, and good luck.